Okay.
Yes, Rhonda.
So,
Okay.
for those of you that did not know, we are going to have another money conversation today. This is for my emerging entrepreneurs that would like to become established and my established entrepreneurs that want to go to overdrive. So, thank you, Jennifer, for being here. And you know how I love to start the show. I'm going to ask you what's one word you would use to describe where we are now. What word would that be?
So the word that I use would be, I think, cautious. I think people are giving more consideration about how to move forward on many fronts. I think they're giving more consideration because they're cautious on how to take better care of our aging population, our people that are in need of services and assistance.
Yes.
And then, of course, people like you that are trying to help small businesses learn how to become better small businesses.
Yes, that's the plan. That's the plan. And we're on that road, and we're on that road together. And we're earmarking some destination points, right? Because what's a road if you don't know where you're going? Okay.
Definitely.
And one of those destinations is profitability. Because there's a big lesson, even myself, that learned through this is that, you know, cash is truly king. And being able to track it, know where it is, know where it's coming from is the
Exactly right.
yeah, is the premise of our discussion. So then in context, where should an entrepreneur start for better, because you're not a bookkeeper, you're not a CPA, you're the tool. You're the tool. So as I'm looking at tools to track, you know, my in and out of my finances, where would you have an entrepreneur start?
So we talked a little bit about the checklist that we've developed for entrepreneurs. And we created this list probably 25 years ago, and we give it away to everybody that we can. And the three main reasons that we developed it and that we continue to give it away is because that checklist helps people, gives them a roadmap, right? Where am I? Where do I want to be? And kind of how am I going to get there?
Yes.
And then it helps people get organized, right? What's the process, and how do I do something repetitively over and over and over again? And then the result of those two is then on the back end of this, it gives people visibility. You know, am I profitable? If I'm not profitable, where am I not profitable? Mm-hmm. So that roadmap, as we all know, right, is the best practices. Let's get from point A to point B.
So let's talk about that for a second, Jennifer.
Okay.
So you talked about the where am I now and where I'm going. And then when I look at the checklist, which will actually have a link down below for everybody, so you can have this checklist for you and maybe even rewatch the video after you understand the concepts to apply the knowledge that Jennifer has given us. There are annual things that we need to do on this checklist. There are monthly things that we need to do, and some, you know, quite a few best practices. Describe to us or take us through like a month, like why are certain things a monthly thing and why are certain things a quarterly thing? Like how did the calendar that layers into this monthly checklist?
Right. So typically the monthly things are also they're included as a part of the quarterly. There's just more. Okay. And the monthly and quarterly are also included as a part of the year. Mm-hmm. So at the end of every month, one of the things that we suggest that people do is you print out a few reports, and you don't have to be an accountant and you don't have to be a me to do this kind of a thing. Anybody can do this. So one of the first reports we look at is called the General Ledger Trial Balance. And that's kind of the skeleton, right? It gives everybody categories. If I'm a lemonade stand, maybe I have to buy lemons and I have to buy sugar or cups, and those become expenses, right? And that's posted to a category. And then maybe I've got money coming in from my lemonade stand, or maybe money coming in from other sources. So I categorize those in income. And the next report that you look at is called the Accounts Receivable Aging Report. And the reason that you look at
receivable means money that's coming into my company.
Exactly. Okay. Exactly, right? People owe you money. And, you know, typically today people are collecting money as they go, right? Somebody buys something online, you get paid for it before you send it to them. Life is good because you have your money up front. But there are many businesses that give you terms, and that's the ability for you to provide a service or a product and then send somebody an invoice and tell them that they now owe you money, and then you expect them to pay you for those services or goods. Right. And one of the things that accounts receivable aging report does for you is it tells you how much money to expect coming in the door. And the other thing that it really does for you that small business owners, it's critical that they pay attention to this, is how old is it that somebody owes you money? Have they owed you money for 5 days? Have they owed you money for 4 months? Do I need to be worried whether or not I'm going to collect that money?
Right.
And so that's why that report is so important to look at it.
Okay.
The next report that, go ahead.
No, I was just going to recap to make sure that I'm following along, because I am
Okay.
financially, I call myself illiterate. There's nothing wrong with me in that department, but just the word and the way that you're tracking it and reporting it, I want to make sure that we understand that. So when I look at these reports, one of them is telling me how much money I've got coming in and that's owed to me. So the other thing, and we talked about this in one of the other videos that I'll link below, is that you're actually even talking about cash flow, because understanding what money is coming in, I can understand, you know, where I'm covered and where my gaps are with in return with what money is going out. Yes?
Exactly. Yeah. And at the end of this, we'll talk about the components of the cash flow if you want, real quick.
Oh, okay.
So the next report that you need to look at is what's called the accounts payable aging report. And that's how much money you owe other people. That's that money that's going out the door.
Got it.
Right? And you can look at it and say, well, I only have, you know, $5,000 this month, so I can only pay. Or you could look at it and say, my receivables money is coming in and I'm expecting 10,000. I've got 5,000. Maybe I can pay all of my bills.
I see.
The following report that you want to take a look at is called the inventory valuation report. And that's a list of, if you buy and sell coffee cups, right? How many coffee cups have I bought? How many are sitting in my warehouse? And what's the cost of those items? So if you take the quantity times the cost, it gives you the value. How much money do you have sitting on the shelf in your warehouse? Right? What do I have for sale? So people need to understand how to manage that inventory. So if I expect that I should have 25 coffee cups in my warehouse, and I've got some type of a report that tells me that, then I should be able to go to the warehouse and look and see I've got 25 coffee cups. What happens if I'm missing 5 coffee cups? Oh. So it's important. Did they get broken? Did somebody go put them in the break room? Did somebody take them home? Right?
Right.
You need to be able to monitor and measure that. So the next indicator is your payroll, your gross wages. And that's how much money you're spending every month on having people help you do processes in your business. So if you look at that and it's a big number, which it typically is, inventory or payroll tend to be the largest costs for most businesses. Then you just need to contemplate, you know, am I getting the most, or am I using all my resources inside my business to their full potential, so that I'm being as profitable as I can? And then the last item that you look at is cash. You're right, cash is king. So every month, I look at our cash balance on a daily basis.
Okay.
But every month, you need to be looking at your cash balance. You need to be looking at the balance in your checkbook, right, which is different than the available cash you have in the bank. They're two different things. So cash actually gets reconciled twice, and you're right, cash is king. You need to know how much money you have to spend. Otherwise, you can't anticipate what bills that you can pay. Or if you want to go buy a new vehicle or other types of things for your business, you might not have the money.
Where's the money?
Now let's talk about that cash flow. Now that we've talked about the key components.
Let's go back and let's go back for a second, Jennifer, because one of the things that you talked about, and I'm hearing, again, the timing element to seeing when things are due as far as payable out, when money will be received and actually brought into your company, and where those two do or don't align. And I think this is one of the things that was mentioned in another video about where that misalignment is. That shows where the supplemental, like loans, lines of credit, credit cards, so you can see and track and almost predict, right, where those gaps are once you're comparing those. The one question I was going to ask you is, you called each one of these a report. Is there one report that we read that gives us these things, or are these all individual reports?
Those are actually individual reports, because in any kind of a record keeping system, right, you have a report that generates your financial statements. That's your general ledger is a backbone, and then you have a balance sheet and an income statement.
Yes.
And then you have what I'll refer to as subsidiaries, but they don't really call them that these days. But it's the other parts of your system that you measure against those financials to make sure that your financials are healthy. For example, if I printed a detail list of all the money that people owed me on my accounts receivable report, I would look at my balance sheet and I would look for the account called accounts receivable.
Okay.
And the totals in those two should be that they should agree. They should be the same balance.
I see.
And that tells us that's the measure that my financials are healthy.
Yes. So, and I like,
Maybe not.
well, I like that you actually use that word because what is it? They say what gets measured, gets done, right? And if we're tracking and conscious, and then I also like the fact that you mentioned that this reporting system, in the way that you're tracking it in whichever software product that you're using, it's measuring it in for different outcomes other than your bank account. So
Exactly.
now, when you talked about the two numbers not matching, should they be drastically different? Should they be close? Is there a time in our reporting where they should be the same?
They should always be the same. And if there's a difference, there's typically only two reasons that those balances from your subsidiaries to the general ledger don't agree. So one reason might be somebody's posted a journal entry or some kind of an entry for whatever reason into the wrong account,
Mm-hmm.
or whoever set your system up, or you or your friend or your neighbor or a consultant, perhaps something's not set up the way that it should be, because all these systems today, all that stuff should happen all by itself in the back end without anything not reconciling.
Not doing it. I understand. Do you have okay, so I'm going to move to organize because I think this is wrong with that conversation. We can probably circle back to cash flow, but actually I think we should probably save cash flow. And once our emerging and established entrepreneurs get their reports, we should probably invite them to a discussion about cash flow once they have those reports so they can really understand how this relates to them. So we're actually going to save that one. So you guys will have to check back in to hear the cash flow conversation. But you mentioned organization, and that was one of the things that I liked when I was looking at this sheet, because with all of the different hats that we wear in our business, this was a little bit of a regimen. So can you talk about that organization and what the checklist will do?
Yeah, so we use the checklist with businesses. So at the end of it's the month, I've put all my transactions in my system. Then I print my trial balance, I print my payables, I print my receivables, I print my maybe payroll earnings or my inventory valuation report. And it's just a little checklist that tells me that either I or I've delegated that to somebody else. And then, if I'm a company that's processing payroll, maybe I need to go pay my payroll taxes. Maybe I need to go pay my sales taxes.
Right.
Those are all things that have to happen on some type of a frequency. Maybe it's every pay period. Maybe it's every month. At the end of the quarter, you have to go file quarterly payroll tax returns.
Right.
Sometimes at the end of the quarter, you might have to pay sales tax returns. Depends on the volume of your wage for payroll, and it depends on the volume of your sales and sales tax collected for sales tax.
Right.
And that's what that checklist does. It reminds us that at some frequency, monthly, quarterly, annually, I've got things that I need to go take care of, because if you don't, in some states, there are forms that if you don't file some forms with the states, they might dissolve you as an organization that's operating in that state. So you can't forget to do those kinds of things. And that's what this checklist is intended to do, is to give people as a starting point, a basis for all the things they need to remember. And then you add to and take off when things change.
When they change. So one of the things is we established your basis of expertise and that you are a guru when it comes to the software and the proper tools for people to use. So who would you recommend should be on an entrepreneur's bench? Like if I have a Jennifer in my life and she's telling me which tools to use, who's going to help guide me and direct me once I have that information?
So, everybody needs an attorney, right? Because you need legal documents reviewed from time to time, and you need somebody you can pick up the phone and call and feel like you can trust. Everybody needs an accountant. We go in and put in accounting systems, and what we tell everybody is, every quarter, every 6 months, once a year, have your accountant review all this, make sure that they're in agreement with us and that we've not missed something.
Yeah.
And even better than that, accountants are great, because if your business is really profitable and you're having conversations with them, especially as we get towards the end of the year, they can counsel you on how to go and what are acceptable deductions or strategies, things that you can do to, be able to reinvest your money back in your business.
Yes.
Or minimize your tax consequences at the end of the year.
Yeah, it's funny because now just in this conversation did I realize the agility that a checklist like this would give you as a business owner. So to your point, if you're thinking of investing in equipment, if you're thinking of hiring a new salesperson or staff member, that having a checklist like this and using the reporting mechanisms will allow you to kind of forecast what that looks like. What salary can I offer this person, or how much do I have available to invest, or should I look for other means of financing that equipment? So this is really good.
Yeah, that's because here's the thing, and I didn't realize this. I mean, I think I realized it, but I didn't realize it probably until the last 4 or 5 years. The better organized I am as a business, the more profitable that you can be as a business, because you utilize all of your resources to their capacity.
I'm writing that down. Organization equals profitability. I like that.
Absolutely.
I like that. The other saying that we have here on the road to recovery is that information plus implementation equals transformation. So with that, what's one actionable thing that a business owner can do, whether it's implementing best practices or something else that you recommend? What's one actionable step that everyone should do?
So one of the things I took early on as a business, and I think if there's like one of those things that I could accredit to actually surviving for 30 years as a small business, I went and sought out knowledge from other people. You've got SCORE, right? They give you low cost or no cost training. The Small Business Technology Resource Development Centers is another great resource for entrepreneurs that are up and coming. And then you have people like Goldman Sachs, right? They're helping the businesses that are in growth mode try to become better businesses. So that would be the one thing. Go and seek out mentors, knowledge at some of these places, because there's a lot of resources out there that people, I think, don't leverage as much as they could.
Yeah, you reminded me of the old African proverb. It says, if you want to go fast, go alone. If you want to go far, go together. So that's
exactly
huge. Yes. Thank you, Jennifer. So for these tools, or for entrepreneurs that are looking to jury different products and software, do you mind sharing the best way to contact you or the best way to find you?
The best way to contact us would be via our website, which is www.jcscomputer.com. I love phone calls, and that number is 800-475-1047.
All right. Thank you, Jennifer. Thanks for being here on the road to recovery with us. We appreciate your time.
Thank you so much for having me on.